Well, hey, welcome to Finance Shminance, the podcast that tries not to take finance too seriously, I should say. I'm Adam, and with me is the guru of all things finance, Nick Rossolillo of Concinnus Financial. Nick, how are we doing?
I'm great. How's it going, Adam?
Well, I could be better, but it's good enough, I suppose.
Cool.
Hey, so, recently I saw on the LinkedIn that you wrote an article about stadium sponsorship, companies who sponsor stadiums, and their performance, their stock performance, and more to that point, those companies going into bankruptcy. Mm-hmm. And I thought that was really interesting, so I thought we could take a couple minutes to talk a little bit more about what you found and kind of like give us an overview of how you got to thinking about this and what you found, and maybe give us a little insight in that.
Yeah. Well, we started doing the research because earlier this year, Sports Authority goes bankrupt. And lo and behold, Sports Authority sponsored the Denver Broncos stadium.
Yeah, Mile High Stadium.
Yeah, Super Bowl champs.
Right.
Brilliant marketing, right?
I think so.
Well, wrong. They went bankrupt. So apparently it wasn't good enough. And then, Chesapeake Energy is sponsoring the Oklahoma City Thunder.
Right.
And we all know what's been going on for, going on the third year now with oil and energy. So I went into this study thinking companies that sponsor stadiums, that purchase these stadium naming rights, must be complete boneheads. They don't know what they're doing. They're terrible investments.
Sure. What are some? I'm thinking of like MCI used to sponsor the Verizon, now the Verizon Center, where the Washington Wizards and the Capitals play there in Washington D.C. What are some examples what are the examples that you kind of brought to mind when you started thinking about this?
Well, MCI, that was one. Enron was another one. PSI Net back during the tech boom. Alltel.
Sure.
Adelphia Communications. General Motors even. For the Vancouver Canucks, bankrupt. Delta Airlines sponsored the Utah Jazz Stadium, bankrupt.
So going into this, I'm getting the feeling that your hypothesis was that companies who spend the money to sponsor a stadium, which has, in their minds, has some real value as far as advertising and community relations are concerned, that those companies were foolish, and the result is that their foolish spending caused them to go into bankruptcy. Is that kind of the idea?
Not necessarily that the naming rights themselves caused them to go bankrupt, but I was thinking that it would maybe be indicative of some poor stewardship from management. Maybe they weren't exactly the spendthrift. Maybe they were throwing money at places without really considering exactly what they were getting out of it.
Sure.
And as a result, at worst, they have a tendency to go bankrupt, and at best, the stock of the company underperforms the market. That was my hypothesis before going into the study.
Interesting. I have a marketing background myself, and I can tell you from experience that there are a number of ways in which that hypothesis could have been true. I can think of a few CEOs who just wanted to do something because it made them feel good, or they wanted to sponsor their buddy's golf tournament or whatever it was.
Sure.
So they spend some silly money that way. And I can imagine that would also be kind of a head rush for a CEO of a large company. Oh, I own the basketball naming rights for the Seattle Supersonics. So I could see the way a couple of things. So, but that's the hypothesis going into it. What's the result? What was the findings? What did the data tell us?
As it turns out, that was only partially true.
Okay.
So a lot of the bankruptcies for these companies that purchase naming rights occurred during bust periods after a large boom. So like I just mentioned, the tech bubble, a large number of bankruptcies of companies that had naming rights when the tech bubble burst finally.
Sure.
And then again during the financial crisis, at that time, a lot of companies that owned these, that's where a lot of the bankruptcies occurred. So the results that we found were more related to indicating that there might be a bubble in some segment of the economy, And you can see a lot of these companies within a certain sector all of a sudden start sponsoring stadiums.
Interesting. Yeah, okay.
For example, oil and energy companies leading up to 2014 when, all of a sudden oil decides to collapse.
Right,
Price of oil starts to collapse, just as an example. But even then, though, that's not the whole story. So the other thing to consider is what exactly do companies get for these naming rights?
Okay.
A lot of companies that sponsor these, there's a dubious return for them. So I mentioned Chesapeake Energy before.
Right.
Chesapeake Energy doesn't sell anything to the general public.
No.
What exactly do they get for everyone seeing Chesapeake Energy over the stadium as they walk in to watch
the Oklahoma City Thunder play? Yeah,
right. Formerly the league MVP, play basketball, but now just Russell Westbrook.
Yeah, that's right.
What do they get? What does Chesapeake Energy get for naming the stadium?
They get some good feelings, goodwill there in their hometown, maybe?
Maybe. I mean, I would like to think that Chesapeake has done a value analysis on that and determined they get more.
Theoretically.
Than just that, but maybe not. However, you compare that to a company like Molson Coors Brewing.
Okay.
Longtime stadium name owner.
Right.
That makes perfect sense. That a beer company would sponsor a sports arena.
Yeah, baseball and beer go hand in hand, I'm told.
Exactly. People buy the beer while they're there at the stadium.
Yeah.
Maybe they pick up a 6-pack on the way home because they're thinking about it.
Maybe.
Maybe. Target is another one. They
Sure.
sponsor a couple stadiums up in their neck of the woods.
Right.
In Minnesota. Gosh, that's actually good positive PR for the public to see Target's name, because Target actually sells things to the general public.
Right, so yeah, you can go from their stadium to their store and buy your whatever you're going to buy that day.
Yeah, so we can see that in the data, that companies that actually sell something to the public who purchase these naming rights, their stock performance over the period of time that they had these naming rights far exceeded the markets. I think it's not because they owned the naming rights, but it probably just would be maybe more indicative of a management team that knows where to spend their dollars most effectively. What I learned from the lesson, from the research, was the importance of evaluating the management team of the companies you're going to own. If you own stocks, if you own businesses, how good is the management team? What is their track record?
Right. Well, that makes sense to me.
And it's kind of fun research. You can check it out on the website.
Yeah. So we can get that at on the Concinnus website.
Yes. ConcinnusFin.com.
I'm going to learn how to spell that eventually. You would think I would have learned it before I started doing this program. Right?
Well, most likely if you found this blog, you know how to spell Concinnus.
That's a good point. With that said, we will let you get back to watching those sports arenas have games played in them. And we'll thank you for your time. We'll catch you next time. My name's Adam. That's Nick. Thanks again.